I sold all of my crypto. I have nothing left. So today in this video, I'm going to be explaining why, and we're going to be doing a proper no BS technical analysis update for Bitcoin and Ethereum. So it's no secret that I've been bearish on the markets. If we jump on over to my YouTube channel, then we can start to see I started to pump out these videos about crypto is crashing. It says about a month ago, but when we click on it here, then we can see that the date was 30th of April 2022. So it was about 2 months ago. So what people don't realize about trading and investing is you don't need to know every single move, what's going to happen over the next 10 years. As long as you can stay like 1 to 2 months ahead, especially as a trader, then that can really change the course of your performance and it can really add to the bottom line. So it's been a little while since we did a Bitcoin technical analysis update. Let's just quickly react to the last one I did, which was on 26th of May. It's been about a month now. Let's just react to this. And what would that be as well? Across the highs, it's lower high, lower high, lower high. And then if we break down below this low, it'll be a new low. And that is what will spark a lot of fear and a lot of liquidations, because the people that are going long, the people that are in the tribe of crypto and they're so brainwashed by crypto, right? And they can't look at this without an ego. They all have their stop loss below this wick here. They all have their stop loss below about, it's probably around 24,000, 23,000 is their stop loss, right? And they're targeting upwards that we still go to 100,000. Now, when you hit that, it creates a big, all of these sell orders, because stop losses, if you're buying first and you put a stop loss, what is that? That's a sell order. So when you trigger that, there's all of these sells sitting there. And then that's when you can spike down really quickly and you get these big red candles. All right. So what I was saying there was back then, if we check the price, Bitcoin was hovering at around $30,000. It seemed to be support. But what I was saying was we were at that support for way too long. We had way too many touches. So most likely the next move down, as soon as we went below that, that would create a big liquidation event. And like I was saying, the last 3 seconds of that clip, there will be a big ass red candle. And that's exactly what we got. So as soon as we started to attack these lows down here, that's when I sold all of the cryptos, because I knew like the next big move is just going to be a big red candle, because that's how liquidation events, that's how they plan out. So because of this liquidation event, Bitcoin from high to low is now down 74%. And then if we go check out Ethereum, Ethereum is down 82%. So this is starting to get really enticing just because of how big of a discount it is. But if we're looking at the technicals, I still feel like this was the previous support level for Ethereum 1,700-ish. That's where we broke down. That's where we had the big liquidation event. Now, what has that turned into? It's turned into a big level of resistance. So I feel like, yeah, you could move up now because you've had this many red candles in a row. Like how many is that? It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 red weeks in a row for Ethereum. That's insane. So maybe short term fear is at a max. Medium term, I still feel like it can go lower. So the base case for me is, yeah, maybe you get some green weeks up to roughly 1,700-ish. It doesn't mean it has to revert right at that exact level, but roughly in this area here somewhere, I feel like the top will be in for the short term. And then I think we're going to go down one last time to hit the big targets. That's where I'm at least going to be confident to start nibbling a little bit. So that's the targets for the bus number 3 that we've been talking about over the last couple of months. So with Bitcoin, we had bus number 1 down about 80%, bus 2, 80%. Now we're down about 74%. Everybody was saying I'm absolutely crazy, calling it over the last couple of months that we're going to crash down here. But look at the target. We're practically there. Like, what was it exactly? 17,600. The upper region of the target was 16,000. So we're practically off by like $1,000. So this is what I'm saying about, as a trader, you don't need to predict every single move over the next 10 years. All you need to do is have a rough idea what's going to happen over the next couple of months, be ahead of everybody else, and this can really drastically change your performance over the long term. A rule that I like to live by is over the short and medium term, the only thing that matters is supply versus demand. Like the fundamentals are very important, but I feel like that's like looking 5 years and 10 years out into the future. So over the short term, the only thing that matters is who is buying and who is selling. If there's more buyers, price goes up. If there's more sells, price goes down. As we know in crypto, it's heavily driven by retail traders or the public. And I feel like they haven't panicked hard enough yet. Even though the price is down 70, 80, 90% with some of these cryptos, I feel like they're going to panic even harder because what we have on the cards is a potential recession. That is the big risk that we need to protect ourselves against. And if that recession does hit, then I feel like that will force them to capitulate even harder. Like right now, it really sucks to be a retail trader. Over the last couple of years, they thought that the market was so easy to profit from. They got caught off guard by that. And now all of their investments are down 80, 90%. And on top of that, you have rising interest rates, which in places like here in Australia, that's going to make mortgages harder to pay. And not only that, we have inflation. So the costs of food and petrol is going through the roof. So right now, the public is really struggling. And if this continues for the foreseeable future, like how long can they actually last until they need to sell off some of their investments? Because you start to feel like when everything's going down, food prices, everything's going up, why am I holding these silly assets which are hurting me even more in the short term? Also, what we're starting to see in the crypto markets is very prominent, high profile figures. They're completely blowing up. So there was an example of Three Arrows Capital recently. These guys were like the biggest hedge fund. So the rumor is that they grew their money and investors' money to like $18 billion. And now it's almost completely wiped out. So they got liquidated on that candle that we were talking about. The other thing is, remember when I made that video, Luna crashed 99%. What's next for the crypto market? Let's just check out a little clip here so quickly is because this has actually made me more bearish than I was in the past with my last video. The reason why I'm more bearish is because we need to understand the economics of what is actually happening right now. So Luna was like one of the golden childs of crypto. Everybody had exposure to Luna. It had drawn everybody in. And even myself, I had small little trades on Luna too. And now that you have this massive, massive loss, it's going to instill fear in the cryptocurrency investors. So my main takeaway from that clip is when these big projects, they blow up, then that instills fear into the crypto markets. And when people are fearful, what are they most likely to do? They're going to buy less, right? And they're going to increase their selling orders because they want actually cash for the first time. And so what actually happens is a collateral effect. When something blows up, it actually increases the likelihood of another thing blowing up. And this is how, like at a flick of a switch, Ethereum can go from $5,000 at the highs down to like $800 really quickly in just a matter of months. It's just that compounding effect of negativity. So the next thing that we need to understand is the investment risk curve. So here is a chart of the S&P 500 from roughly 2006 until present. It has the big 2008 financial crisis in it where the price crashed by 55%. So what the investment risk curve is about is understanding what are investors likely to be buying in terms of assets, depending on where we are in the investment cycle. So let's just say that when the S&P 500 is crashing really hard, down by 55%. That means the S&P 500, one of the safest assets in the world, or less risky assets in the world, all of the other riskier assets, the more riskier they are, they will be down even more most likely. So when the S&P 500 is down 55%, investors are literally too scared to even put money into the S&P. So this starts the investment curve, the risk curve, which goes like this. So at the bottom of a major correction, people are even too scared to put money in the S&P 500. Then what happens is the price goes up a little bit, and now they start to get a little bit of confidence to put in a little bit of money into these index funds. And then the price goes up a little bit more, so they get even more confidence to put probably more money into the index funds. Then it starts breaking out again and going even higher. And then this is when the investors start to think, hey, you know what? I can put a bit of money in individual stocks. Maybe I take it nice and safe with something like Johnson & Johnson or Coca-Cola or something like that. And then, so they're going further up the risk curve because that's now individual assets. And then the price goes up a little bit more. The world is really starting to enter into a raging bull market. And that's when they're like, hey, you know what? I've heard about these technology companies like Google, Amazon, Facebook, and all of these guys. I might start dabbling in them. And then that goes up as well. So their confidence as an investor or trader is rising. And then that's when you kind of get to the stage of, oh, hey, I've heard about these cryptocurrency things. I might put a little bit of money in Bitcoin. Then that goes up again. Then they're like, oh, you know what? I might have heard about Ethereum. Let's put in a little bit more money here. And then, it goes up further. Let's put in money in altcoins and then other alternative investments like NFTs. And it could be all kinds of things. And that's when you find yourself really going all the way up the risk curve. So at the beginning, investors were really scared to even have an index fund. Now near the top, they probably have barely any of an index fund and they hate index funds because they're way too slow. Now, what happens? When the market corrects again like this, you unravel the entire risk curve and all of this stuff at the top gets dropped the hardest and everything reverts back to the S&P 500 and assets like that, the very safe assets that have been tested over time. So this is another thing that's kind of scaring me from buying crypto is the lower we go with the S&P 500 and the NASDAQ 100 and Bitcoin and Ethereum itself, then the more likelihood that people will be less confident in purchasing cryptocurrencies, and they're going to go all the way down the risk curve and only invest in like index funds. And some people will literally be too scared to even do that. And the last reason of why I think crypto can go lower again is because all of these cryptos, they don't have investment moats. So what are investment moats? They are the defense. Probably one of the most important things that investment needs to have so competitors can't come and kill the investment. If you'd like to learn more about investment moats, it's probably one of the most important lessons there are to learn about investing, then please check out my video that I posted 2 weeks ago. It only got like 262 views, so it does deserve, in my opinion, a whole lot more just because of how important it is. That video will be linked down below. It's called The Best Investing Lesson Warren Buffett Taught Me. I highly recommend you check out the entirety of that video. All right, guys, that wraps up today's video. If you enjoyed it, please leave a like, comment, and subscribe, and I'll see you in the next